the expectations are a 25 base points cut on September, all right? The reason is exactly because of the tight labor, and also because of the, all the DXY, all the long and short-term bonds are actually decreasing in value. So all of this is making the market believe that there is the turning point for the Fed to cut another 25 base points. And that will drag the interest rates range between 4 to 425, okay? This is really, really bearish, okay, because previously the US dollar index was one of the biggest performance for the month of July, raising over 3.2%, and that we haven't seen in a month raising that much since August 2022. So that is pretty like 3 years all-time high in a sense of closing highs, okay? Not all-time high into the price, but all-time high into the percentage of the month by month, okay? So we had a really close, we have a really, really strong close for the DXY. So that was quite interesting. And after that, 1st of August, that was on Friday, the month already like 50% of the whole return of the month of July has been erupted in 15 minutes on the NFP. Okay, so the main reason why the DXY was actually pricing higher and Euro dollar was going down, US dollar Japanese yen was going up, GBP US dollar was going down, Aussie dollar was going down, etc., was because the market was specifying a Fed on higher for longer based on what Jerome Powell has been saying, that the market was stable, that we needed inflation to come back, to come lower, so we could cut interest rates, etc., etc. So that made everyone believe that, okay, cool, the Fed is on a higher for longer approach, and they actually were. I'm not saying they weren't. So they actually were, but with that now, the NFP coming at 70,000 and unemployment rate continue the same, and average hourly earnings as well, that opens the door for a possible cut. Okay, because that's exactly what they want. They want less people employed, so less people will have money to spend, and inflation will continue to decline.